Hello everyone. During weekend, HDFC Bank released its quarterly results. Hence, let's discuss those in detail in addition to our regular pre-market report video for today, 21st October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. 22 companies such as HDFC Bank, Kotak Bank, Tech Mahindra, etc. all released their quarterly results in the last 2 days. So today, most probably those declared results expects to drive the Indian market. About HDFC Bank, if required, please pause and have a look. Yearly basis, net interest income increased by 10% and comes around 30,114 crore rupees. Here, I don't have the Bloomberg estimation, rather I got 7 local Indian analyst estimation. In that, it beats 4 analysts and didn't beat 3. So, we can say net interest income came in line with the expectation. Whereas, on the other hand, net profit on the yearly basis, it increased only 5%, 16,821 crore rupees, but it beats most of the analyst estimation. Hence, net profit wise clearly positive. Then about asset quality, compared to a quarter ago, the gross NPA increased marginally to 1.36% from 1.33%, and it's similar on net NPA. It also increased marginally to 0.41% from 0.39% compared to a quarter ago. So asset quality wise, it's neutral to negative. Now coming to the HDFC Bank's specific problem, higher credit to deposit ratio. Just for info, most of the bank's credit to deposit ratio will be around 80 to 90%, but HDFC Bank's credit to deposit ratio at the end of last quarter, it was around 104%. That this quarter end, it dropped to 100%. Hence, on last Saturday, HDFC Bank's CEO had his analyst meet, and in that he explained because of this high credit to deposit ratio, for the present financial year FY 2025, he expects HDFC Bank to grow below the banking sector average. Then in the next financial year FY 2026 to grow in line with the banking sector average, and in the following upcoming financial year FY 2027 he expects HDFC Bank to grow faster than the country's average banking sector growth. We can take this scenario in both positive and negative. Positive means this is not the new issue. At the end of March 2024, credit to deposit ratio was around 110%. June quarter end, it dropped to 104%. Then now last quarter end, it further dropped to 100%. Hence, it's dropping fast, and it seems by end of this financial year, HDFC Bank might attain its pre-merger state around 87 to 89%, which is clear good direction. But at the same time, on the negative side, management itself informed the analyst there will be below average growth for the next 1.5 years, which will make the HDFC Bank at the present price point to the growth investors very unattractive. Overall, top line results beats the analyst estimation. Asset quality, okay. High credit to deposit ratio, still very much a problem. In addition, one more significant positive, HDFC Bank gave an update about its financial arm IPO, HDB Financial Services. Basically, HDFC Bank is going to raise 12,500 crore rupees. In that, 10,000 crore rupees will be offer for sale, and the remaining 2,500 crore rupees will be an issue of shares. So, if investors bought all the HDFC Bank CEO speech and HDB Financial Service IPO means, today HDFC Bank might go higher. So, let's see. According to me, there is no unknown new negative, and the result seems positive. Disclaimer, I can be wrong, and at present, significant of my money is invested in the HDFC Bank. Then about the other two, Kotak Mahindra Bank results comes marginally below the estimation. On the other hand, Tech Mahindra posted very good top line financials. It comfortably beats the analyst estimation. So those were the things I like to highlight about the results released during the weekend. Then about US market, Apple posted the strong sales in China, and also Netflix posted the very good quarterly results. Hence, last Friday night, US market closed positive with VIX dropping significantly above 5%. Dow Jones increased marginally to 0.09%, S&P 500 up by 0.4%, and Nasdaq increased by 0.63%. Then Indian ADR wise, as it is, ICICI Bank increased 2.5% in line with the Indian market, but not enough increase to clear off all the negative arbitrage. And because of the result influence, Infosys closed negative, and and Wipro increased crazy 5%. On the positive side, arbitrage difference wise, both Wipro and Infosys indicating positive, hence possibly both the IT stocks ADR indicating the positive trade today. Just for info, at the ADR trading time, HDFC Bank's result was not released, hence bank's indication might mislead. Then about GIFT Nifty, Saturday early morning it closed at 24,891. So for now, it's indicating the gap down of 50 to 70 points. As a summary, US market closed positive despite last week very high inflation number. So the momentum was not that bad. Even now, US future market is trading positive. In addition, during weekend, Wells Fargo issued the skepticism statement about China's stimulus package and the movement of investment there. Like they explained the prognosis that the stimulus package is good for the struggling property sector, but it doesn't improve the underlying demand concern. Hopefully, this warning prevents the FII's selling spree in Indian market. So far this October month, they net sold for around 80,000 crore rupees. So let's hope for the positive trade. But suppose if market took this HDFC Bank result as negative, then it's a complete different game. And in addition, GIFT Nifty indicating the gap down opening of around 50 points. Moving on, then as per stock open interest, L&T Tech, India Mart, Mahanagar Gas, Bajaj Auto and Tech Mahindra got an increase in open interest along with a negative close, indicates the short build up. On the other hand, Axis Bank, Birla Soft, SBI Life, HDFC Life Insurance, Page Industries and Apollo Hospital got an increase in open interest with a positive price close, which means these stocks got the long build up. Then about the things to look out. Today, Ultratech Cement, Union Bank of India, Bajaj Housing Finance, City Union Bank and Mahindra Logistics are some of the major Indian companies' earnings results are scheduled to release. And in terms of macro, early morning before our market opening, China's interest rate decision is due, and more importantly at 3:30 p.m. in US, IMF meeting is scheduled. Just for info, last week IMF gave the warning about increasing global public debt, which expects to increase over $100 trillion by end of this year, and any further warning can potentially damage the global momentum. Anyway, because it is on the aftermarket hours, if any, we can see its impact on tomorrow's market. So as far as I know, these two are the only macros we need to keep an eye out today. Coming to technical, last Friday Nifty opened 80 points gap down. However, as the day progressed, it erased all the losses and turned positive and closed about 24,850. Thus, on the daily chart, Nifty formed a bullish candlestick pattern but still traded below the 20 and 50-day exponential moving average and near the lower Bollinger Band. And on the weekly chart, this Friday's recovery led to the formation of a high wave-like candle for the second consecutive week, which reflects the uncertainty, and this pattern suggesting a lack of clear direction. As a result, for the near term, we may expect more consolidation. On the upside, the 50-day exponential moving average zone of 25,000 to 25,050 will act as the immediate hurdle. Then on the downside, 24,550 to 24,500 zone will act as the immediate support. Any sustainable move below the level 24,500 will lead to sharp selling up to the level of 24,100 in the short term. In case of Bank Nifty, similar to Nifty, it also opened 30 points gap down and dropped to the day's low. However, it also recovered and closed at near 52,100. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern and moved closer to the middle of the Bollinger Band. And also, at present, it moved above all key moving averages with a positive crossover in the RSI momentum indicator. Additionally, on the weekly chart, it formed a bullish candle and negated the lower high lower low pattern, which is a positive sign. Hence, on the higher side, the Fibonacci resistance pivot level 52,950 will act as the resistance, and on the downside, 100-day exponential moving average zone 51,400 to 50,650 expects to act as the support. On the options front, the maximum call option open interest was at 26,000 strike, followed by 25,000 and 25,500, with maximum new call option writing at 25,400 strike and then 25,500 and 24,900. On the put side, the maximum open interest was at 24,000 strike, followed by 24,500 and 24,800, with maximum new put option writing at 24,000 strike and then 24,700 and 24,500. Thus, from options data, it indicates that Nifty might face resistance at 26,000 with support at 24,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.